Can we talk NVIDIA for a second in this note from Costin?
NVIDIA?
I'm sure you've looked at it.
It's my middle name.
I know it is. Since the start of 23, 97% of NVIDIA's return has been driven by greater earnings versus just 3% from valuation expansion. However, year to date, NVIDIA's next 12 months PE ratio has increased from 25 to 42, and that accounts for 56% of the 165% year to date or 171% year to date return. So multiple expansion is pretty significant here.
Okay, so the way you have to look at NVIDIA is that if you look at how much they beat each year, you will see that it turned out that the stock was very cheap. So and that's what you're dealing with.
The analysts are underestimating the ultimate revenue and earnings.
I mean, I can show you from 2013 on, David, they beat, except for the 2018 quarter where they got hurt by the people mining Bitcoin.
Yep.
And what you'll see is that, oh my, you thought it was selling at 30 times earnings. It turned out in retrospect it was selling at 15 times earnings. So that's the story with NVIDIA's multiple. The great defender of NVIDIA has spoken.
Defending yet again. Not worried about what appears to be the multiple expansion, because ultimately that's actually ephemeral, because in fact the multiple is lower than it appears, given the earnings are going to be far higher than analysts expect.
David, you said it much better than I can.
All right,
that's making sure I understood.
Just making sure I understood.
And by the way, Carl, the price tag for NVIDIA's Blackwell is about $35,000. Now that is much higher than it costs to make. It doesn't make it a Taiwan semi. But Jensen Huang, the CEO, would tell you, listen, we've spent billions on this, so we're going to get our return. And that's another reason why people are always surprised.
Although, given what CPI gave us today, Russell's up almost 2%. Is now the time to start buying IWM and everything else?
I still like so many of these companies that are connected with data center.
Really?
I find
what
it so
level
exciting.
of inflation or rates would get you interested in small caps?
Small caps are so hard because they're in the scrum. I mean, they're just in the scrum. I mean, when you go and you look at WD-40 was one of the rare ones.
Lower rates help.
Well, yeah, I know, but when you you can go by the index, but then when you actually do the granular nature, you find, wow, that one's not doing that good, that one's okay, that one's not doing, that's what I'm saying.
Yeah.
I'd rather buy Micron, say, at 132.
All right, so today we got a cooler CPI print, which led to many market participants rotating out of big tech and into mid and smaller cap names in anticipation of a Fed rate cut later this year. NVIDIA was down just over 5.5% today, while the Russell 2000 was up nearly 3.6%. That is a big single-day move for small caps as of late. Now think to yourself, if market participants are going to rotate out of big tech, which big tech name are they the most likely to trim profits from right now? Without a doubt, it's NVIDIA, because of the monstrous run the stock has had in comparison to its peers. We have heard so much this year about concentration, and more concentration, as the recent rally has been led by big tech and most notably led by NVIDIA. Now, a broadening out into mid and small cap stocks, along with a slight pullback in mega cap tech, is very healthy for the market. The rally in the market has had me feeling quite unsettled and cautious recently, because while the market has been slowly moving higher, it has done so on relatively low volume. I want to very briefly talk about multiple expansion and compression, since Jim and David mentioned it. As I've said in the past, my long-term concern regarding NVIDIA is if we at some point get a quarter where growth slows and forward-looking guidance softens. I'm not saying that this is going to happen, but it is a possibility, and it's important to be cognizant of multiple expansion and compression just in case. Let me quickly give an example of rapid multiple expansion and then subsequent compression. Zoom stock. Zoom soared in the early days of the pandemic as lockdowns ensued and people started working remotely. And Zoom stock began trading at many multiples of future earnings. Then as the pandemic subsided and the economy reopened, Zoom stock experienced multiple compression and dropped roughly 90% in price. And keep in mind, the underlying business was doing well and continued growing during this time, even as the stock fell in price. Why did this happen? Because the rate of growth slowed and market participants perceived a less aggressive expansion of the company moving forward, and so they applied a much tighter multiple to the company's stock. Now, please do not misunderstand me here. I'm not saying that NVIDIA is going to drop 90% or that NVIDIA is the next Cisco. That's not at all what I'm saying. What I am saying is that it's important to be aware that NVIDIA is now trading at many multiples of future earnings. And if we see forward-looking guidance start to soften, then I would genuinely be concerned about what happens next in the stock. Now let's briefly talk about NVIDIA stock. As I mentioned yesterday, I'm cautiously optimistic when it comes to NVIDIA, but as I said in yesterday's video, I was seeing conflicting signals regarding NVIDIA's short-term price action, and so I would be watching patiently from the sidelines in the hopes of gaining greater clarity on the situation. And I think that proved to be the right decision after what we saw today. Mid to late July would be the point in time in which NVIDIA typically reaches a relative low in between earnings, but we also have to watch the overall market and be vigilant of any short-term unexpected catalysts, whether they be catalysts to the upside or to the downside. When it comes to NVIDIA, what I'm focusing on right now is Taiwan Semiconductor's earnings report that is scheduled for July 18th. Remember that NVIDIA just designs their chips and they rely on other companies, mainly TSMC, to actually manufacture those chips. With this in mind, TSMC's earnings report next Thursday will be important to watch because of TSMC's close connection with NVIDIA. Feel free to let me know your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.